Hey,
My heart is going dum-dum-dum-dum-dum, just with the excitement of everyone that's enjoying something that I have always wanted to talk about.
trying to look. This is
Look at
the
that gross
first
profit
time.
margin. Look at that gross profit margin. Oh,
Okay. Um, I'm not even going to comment. I'm not going to go there. Like lost my train of thought.
welcome to the stream. Today, we don't have any special guests. It's going to be a tight-knit group between Riley, Tevis, and myself.
I was just going to
Sure.
point out one comment in our chat by Jordan, who commented, "Too late to buy back into SoFi." It is definitely not too late. It's shot up to mid sevens. I think it's now below 7 again. Next week, come rain or shine, I am going to be buying more shares. We have this recency bias, right? It was at 4, and then it went to 7, and people are like, "Oh wait, I don't want to buy at 7." Remember, this was a stock that was at like $25 a year ago, and can very well be at $25, in 1 or 2 years. My opinion, especially on the back of profitability. So don't be afraid to buy in the 7s and the 6s and the 8s, especially if you're holding long term and you believe in that thesis in the long term. So whenever the market's opened on Tuesday, I'm definitely going to be adding to my position.
Yeah, I mean, I was buying this company. I think, one of my first purchases was $14 and something. I was buying it back then. The company has completely changed. One of the first videos that I made on SoFi, we had 2.9 million users.
Yeah.
We have almost 5.3 million users now. It's not even the same business. What are we going to be at the end of 2023 if we continue to add roughly around 500,000 new members every quarter? We're looking at 7 point something million users at the end of this year. It is not too late, especially if we continue to grow at these paces.
This is what happened right before they IPO'd. Before the banking charter was implemented, it was called SoFi Money. Now it's just SoFi Bank. Introduced SoFi Relay, which is their budgeting software inside. They release SoFi Invest. They release home loans and school loans, credit cards, SoFi Rewards. They release all of this in a 24-month period. And if you look at this UI, your actual app right now, it's exactly the same. 4 years have passed. We haven't got anything on the UI front. It kind of looks the same. And there really hasn't been a lot of updates. Just like supplemental stuff like options and SoFi Pay in 4 and the SoFi Plus stuff. Why isn't SoFi updating their UI? All signs point to that they're working in the back end, but there are some instances where we actually figured out that SoFi was working on the background. 10 months ago, on April 29th, there was a leak that happened on the SoFi Android app. And so what Binger9000 did is he went through the code and found these strings, and it hinted to a lot of things that we ended up finding out. Options was one of them, but another one was Twitter feeds. SoFi was actually testing and implementing a possible Twitter feed inside the SoFi Invest part. Since then, Twitter has changed in ownership. It probably scrapped that when Elon Musk went through that whole Twitter trial. This was also found out 10 months ago in April of 2022. SoFi was thinking about implementing custom portfolios. So M1 Finance, they have like pies. You invest a bunch of money and it gets split up into like all your investments, and you can allocate like a percentage to any of those investments. This is what SoFi looked like they were trying to do. They were trying to make some sort of like portfolio investing feature. They can save money on the clearinghouse fees by only buying everything once a day and everybody having a portfolio. Back to this, we launched all of this stuff in a relatively short period of time. There was a lot of developers that SoFi had that worked on all of these products that really had nowhere else to go, because since 2019, we haven't had any UI updates. We haven't had any like meaningful invest updates, or all these people that worked on the crypto, worked on invest. A lot of them left. Two notable people that left were David Sprouse and Steven Sykes. David Sprouse worked at SoFi for 6 years, and Steven Sykes worked there for over 3 years. These weren't small fish. This is the senior director software engineer at SoFi, and then also the vice president business lead of Invest. And they went to start an app called Public, which a lot of you guys know. It's an investment app on the App Store. So basically, Public is cornerstone on the idea of invest in everything and then also do it publicly so you can share your ideas. So it's kind of like a Twitter investment app, which is exactly what everybody thought SoFi was going to be back in 2019, because of course SoFi's name is actually social finance. This was supposed to be SoFi. And if you look at the actual app, it looks very similar to what SoFi has been trying to build. Public and SoFi have really similar UIs. So a lot of people think, these guys that build it for SoFi, they just copied and pasted this over to Public. Of course, this is not true. Public was founded in 2017, well before SoFi started building this investment product. But these two guys did leave to make Public, and it's weird how similar these two companies are when it comes to their investment platforms.
The interesting part here is that in 2021, Public raised about $220 million at a $1.2 billion valuation. That is interesting to me for a couple of reasons. Number one being that SoFi Hong Kong is essentially the closest thing we have to Public of this idea of merging StockTwits or Twitter threads with your actual invest brokerage platform so that you can have that social component of adding friends, sharing portfolios, seeing people's different moves of their buys and sells. Of course, if they're going to raise money in 2021, they're going to have an inflated valuation. So for them to be a unicorn, $1.2 billion valuation, sure, I mean, that could be a little bit inflated, especially in the market that we're in right now in 2023. But it also, with the two sort of co-founders of Public having been tenured SoFi leadership employees, it makes me wonder whether there could be something, behind the works there potentially later down in the future, because you'll see that with a lot of these companies that are acquired, generally it's from good personal relationships in their network. And especially if SoFi had initially planned on expanding that social front, Hong Kong could just be like a dry run, especially considering that this was in their code base, like that Twitter integration all the way since 2020. I wouldn't be surprised if I saw a play for public.com to merge that and provide that into the core SoFi platform, because they have that connection, right? Like we always talk about, what are the banks likely to make an offer for SoFi? Goldman Sachs is always one of the names that comes up. Why? Because Anthony Noto had that connection. Well, it's the exact same thing, right? These guys had the connection with SoFi. And so I wouldn't be surprised later on the line if SoFi made a bid to merge them in.
Or do you think there would be a possible acquisition in 2023? No. Both last acquisitions were pretty big surprises.
And I don't think that they're focusing on the invest platform right now. Like they have their hands full with SoFi Bank. They're focusing on a lot of the banking cores and on the Galileo side. I think if this were to happen, it would be after all their other ducks are in a row, maybe 2024 towards the end of the year, 2025.
What you're seeing right now is a leaked video of a survey that SoFi specifically sent out to a very selected portion of their members. And this is a Figma file, which Tevis can enlighten us in a minute what a Figma file is. But basically, it's not actually real user interfaces. It's just a test of what a user interface could possibly look like on an investment app. SoFi has actually built this and sent it out to members to test their reaction. And this, for the most part, is the largest news update that we've ever had on SoFi Invest since 2019. This is a complete overhaul.
Options, margin.
Yeah, it changes everything to be way more simplified for people. Like right now, if I wanted to set up recurring purchases on SoFi's Invest app, it sucks. Like if I wanted to do a daily recurring purchase, it would take me like 35 hits with my thumb, like taps on my thumb, just to get it all set up for 1 week. It's just a nightmare. So this UI would generate tons of goodwill with the actual members and really drive another layer of stickiness. But this is all leaked in January. This is not confirmed that this is going to be a part of the app. This is just straight from SoFi's mouth on testing different UIs, which is a big update.
Yeah, and one thing I will say on the Figma point. So Figma is just the web app. It's industry standard for all user interface. So basically, before something goes into development, they have to make designs for what it's going to look like. Here in this, you can't click on any of the buttons. It just are representative because it's not been built yet. And sure, the Figma file might be leaked, but from personal experience, from the time when we have designs like high fidelity mockups like this, or a prototype that you can walk through, all the way until the time that it's actually live and implemented could potentially be a long time, because the developers have to go into each of these designs and have to build it out per the designs so that you can actually have functionality when you click on the buttons, they actually do something.
Where do you see their actual development process? Does this change anything to you?
It doesn't change anything to me. I mean, they're not introducing new products, right? This is like a reskin on an
Just
existing product. I don't think you can introduce a social aspect into it until you have a reskin like this. Like, it needs to be simplistic for you to use first from a user experience perspective. And then you can add more functionality on top, because then you just get this massive decision fatigue where users land on the page and there's a gazillion things that they can do and they're overwhelmed and they just leave. That's why I think these UI updates and reskins are important. But again, it's just a matter of what development effort they have and how much effort is needed to implement these designs into reality.
Do you think selling more of these asset-backed securities is a good thing? I don't know if you guys saw the ABS report that actually came out. I think they're selling, I don't remember off the top of my head, like $700 million worth of loans or 400 million. I forget what it was.
Just that personal loans got AAA rated. Am I misquoting that?
Yeah.
So this is my personal take. This is the business of SoFi. We hold our loans to sell. That's the business that we're in. Last time that we actually had an ABS sale, it was gone in like 2 days. It was a really hot product on the market. And the fact that it is a AAA rated product, as far as the ratings agencies are concerned, that's as safe as it gets. Last time I did a video on this, it was like 77% of the overall ABS market only buys AAA loans. So if you're not in AAA, no point in even offering it. And then if you're not, then you also have to give up a higher margin so then people can accept that higher risk. Even in a personal loan environment, SoFi is still considered to be a safe place to potentially buy those loans, right?
I think that's the main point to take away. It's not, should we be selling more? Should we be selling less? I leave that at the discretion of the management team at SoFi. The important point is that we have the flexibility to go either way because of that AAA rating on our personal loans.
That's the money-making opportunity here, is we're finding the client. We're finding the client, and then pension funds, large family trusts, whatever, are buying up these fixed income products because maybe they just want something a little bit safer, guaranteed income, even though it's not guaranteed. We end up selling that. We want cash back so then we can go find new customers. The large bulk of our customer growth and all the money is just coming from the initial sale. We don't actually get 100% of the money back that we would make on the entire term. You sell it at a discount because then you don't have to wait out the full term.
So essentially, if you're selling it, you would sell at a discount compared to how much you could get if you were holding it, so that the benefit of that the buyer has is the incremental difference. Let's say they bought it at whatever they would have paid for 3 years, but since they're holding it for 5 years until that loan expires, they get that incremental 2 years worth of revenue, but they also have the risk of holding it for 5 years.
And they have to wait. They physically have to wait, where we get the upfront chunk right now, and then we get to go literally reapply and get more loans with that. I did get someone that messaged me that did actually say that they recently just got marketed straight on their homepage. Apply for your SoFi mortgage. Potentially they do have a partnership already set up that they're actually actively marketing their mortgages again. So we might be back on track, considering people are getting a front end view on the lock screen of their phones, like getting pinged notifications.
Didn't Noto say in the last 8 months we had little to no progress in the home loan place?
The direct quote was, "We've made more progress in the last 2 months than we have in the previous 18." What that tells me is we narrowed down who we want as our lender, because he also said that we really expedited the process on finding a new partner, saying that, hey, for 18 months, we were transitioning out of this initial lender. They weren't really finding anybody, but in the last 2 months, they expedited that process by which they narrowed down their partner. They found a partner, and that's why you're now seeing progress, and probably why SoFi is advertising the home mortgage side of their business again, which is honestly, that part is just a wild card, right? That's all gravy on top, because in their guidance for them to be profitable in Q4, I don't think that they had accounted for, a home loans getting a nice kick. So if that does happen, if that acceleration in finding that partner leads to them actually restarting home loans faster, again, like I was saying, for 3 pods now, I think profitability is going to come in Q3. So we'll just have to wait and see how that shakes out, but it's definitely promising.
SoFi's business model is to be the one-stop shop for everything, right? I know I've talked about this before, just the amount of data that would entail. Like if a user actually had everything that they have financially like through SoFi, loans, mortgages, just insurance, just everything financial related. Don't you think in the future SoFi will have enough data to just provide the best, stickiest, most secured loans that have a really low fail rate because they just have all the data? If you're a loan company and you're assessing risk just based on the FICO score, there's no way you're going to be able to compete with SoFi in the future if SoFi just literally knows every financial decision that you ever made.
Yeah, I mean, we've talked about this in the past, right? Between the augmentation that Galileo and Technisys provides, where they essentially get, more data from their other partners, and Relay is playing a huge part in this because it's getting people into their ecosystem where you're just siphoning off that data by which you can then make better insights for those users. It's all part of the ecosystem effects, right? And so put all those together and everything going in house with regards to the cores, you can cross reference all of that data because now you own it. Let's say, for example, for mortgages and such, or for insurance, as that comes in house, all of a sudden now they have all this data that they can leverage upon to make more better decisions, right? To have better insight onto their users. And so I think that naturally the writing is on the wall for them to have the most insight on their users as possible because of all of these pieces that might seem scattered today, but tomorrow will not be scattered anymore, will be part of a unified ecosystem.
The only thing that I would add is that to say that SoFi has the most amount of data with 5 million users, I think is a little bit of a stretch. SoFi, I would say head to head against large banks is not even probably winning the data war. If you don't think that
100%.
the large banks are using and applying those all that data, you're overlooking a lot of things. There are a lot of companies that might actually lose against SoFi, small fintechs, and I would say even the buy now pay later markets of Afterpay and Affirm. Also, I'm not really liking their data strategy either.
You're not talking about like 10 to 15 years in the future, because they've like set a pretty damn well cornerstone for like what they want to build in the future. In the future, if I'm a SoFi member, if I literally have like everything through SoFi because they offer everything, one-stop shop, and they're all good products. When we have like 100 million users, or we would start having that, for sure PayPal is gonna beat SoFi in a lot of areas, considering they have data for like 20 years or something. But I don't think a lot of people will be able to generate the quality of data that SoFi will potentially be able to in 10 years because they have all these products under one umbrella.
It is very much like a network effects type of thing. Like the bigger network, the bigger the potential for that even to grow. Look, the fact of the matter is that SoFi might have great insights and great ways to optimize the data that they have. If data per user was a metric, like data points per user, then I'm sure that on a one-to-one basis, SoFi could win out against some legacy banks, even discounting the fact that legacy banks have an advantage because they have tenure for their members. So, for example, a JP Morgan might have 20 years of data on one single person, whereas SoFi just doesn't have that tenure as a company. But even still, let's say data points per user, SoFi would have more than a legacy bank. On aggregate, the legacy bank would still win out because of that tenure. And so all that to say that, sure, they cannot even come close to competing with legacy banks in terms of a data perspective with 5 million users, but the trend is positive. Like the trend is definitely encouraging for us going forward, because in 10 years, SoFi will all of a sudden have the tenure and the data optimization and the ecosystem. And all of a sudden, that if you measure on that same metric, let's say data point per user, then it's going to be a no-brainer.
The CFPB, the Consumer Financial Protection Bureau, that was started in 2008 after the housing crisis, they're actually trying to get open banking instituted. Well, actually, they've been tasked with getting open banking, setting the rules for open banking in America. And 3 to 4 to 5 years in the future, we should be heading over to open banking, which means a few things. It means that data in banks are going to be owned by the actual bank user, not the actual bank. So like if I had a Wells Fargo account for the last 10 years, Wells Fargo would have to give me my data, which means if I moved from Wells Fargo after 10 years of being a customer with them, I can take my data and go to SoFi and give SoFi my data, and SoFi can use that data, which is really, really, really cool for competition in the future for American banks.
The bottom line, it's good for consumers because it moves the banking industry further away from an oligopoly and closer towards a perfect competition, because all of a sudden the big banks will have less of an importance on their established tenure, meaning that I've been a bank for 100 years, I have all the data, all of a sudden I'm like king of the hill, I have a vantage point over all the small players and I can deal with them easily. However, now that all of the users carry their data to other banks, incumbent banks, right? What that does is it creates a perfect competition where the user is king and the user actually has more leverage to then move to and have some of these incumbent banks actually be competitors to legacy players because all of a sudden they have that ammunition, which is that user data.
I disagree with nothing there. Just just really quickly, because I'm still hot on this. Isn't the Supreme Court about to make a ruling on student loans at the end of the month? I haven't looked into it in a
It'll
while.
probably get pushed back.
Is this where, like, if they rule that like Biden is making a mistake, like it will get instituted 60 days after the decision?
That is what we're talking about. It's just
Okay.
personally, I think either one is a great outcome. I don't care about the $10,000. It's not even our customer base. I
Guys,
just want the loans to come back.
It's going to be a super long process where we're not even going to see anything material come in until the summertime. So like they could have started it a month ago, and there you go. There's the comment. They're just going to start hearing arguments at the end of it. So that's going to take a long time. End of July is when they were expecting, and even then they basically wrote it off for the whole year because they said even if we assume that it restarts in August or September, it's going to be a super slow ramp back until the end of the year.
And like the type of members that we're going to be gaining from the advertising in student loans is going to be really more the members are going to be way more profitable in the long term because they're going to have high paying jobs because their college is where SoFi has been advertising for the past 10 years.
And that's fine, Riley, and I agree with everything you're saying, but I just think that like on a macro, you're missing the forest for the trees because student loans isn't like a new product line that is being introduced for the first time. We already have metrics on what it was, pre-COVID. And sure, it's going to be profitable. I don't care if it's the biggest revenue generating item or if it's the smallest revenue generating item. The point is the fact that SoFi was able to track towards profitability, even without that, just makes it so that student loans, even if it was 60% of our business in 2020, it's just gravy on top. Like it's just extra profitability on top, and it just gets us there faster. But even if it never came back, let's just say in a parallel universe, it never comes back, we're still tracking towards profitability. So the fact that the business was versatile enough to be able to pull that off, I think is the main point to take away. And then if it comes back strong, if it comes back pretty weak and then ramps up, and management is going to guide us towards that in Q2 or Q3 as they get more details on what the Supreme Court ruling is. But like I said, it's just the cherry on top of, the sundae because we're still tracking towards profitability even without the student loans.
Let me go to actually defend you here as well, Riley, is that the way student loans even operate in terms of a private market is actually quite cool. So some people don't really understand it. So the federal government, what they do is they sort of offer a one size fits all interest rate and for all student loans practically, right? And so what they're doing is that SoFi can come in and say, hey, this actually is taking an average of everyone, but there are some people that are actually out over excelling and everything like this that could probably get better rates than just the overall average. It's like, group insurance. And if you're not a smoker, you have to pay for all these people that are doing worse than you or something like this. Insurance. So the people that are actually coming to SoFi or anyone that really gets a private student loan, they are probably an outperformer whenever it comes to average incomes and FICO scores. So yeah, like you said, Riley, it's not just college people that have higher incomes than the general public. It's the outperforming college and university students. So it's the people that can actually afford to be with rates that are better than the federal government.
Yeah, let's move on to Nubank.
Okay, so but like, why is Nubank relevant to SoFi?
We can learn a lot from them because honestly, they are like the largest fintech in terms of customers, I think, in the world. They have over 75 million users, but they're only in Latin America. They're going after every single market. So checking accounts, personal loans, credit cards, everything. The users in Latin America are not as affluent as the one that SoFi is going after. The average incomes for a new user is not 165,000. It's actually insanely low. It's people that are making a lot less than minimum wage here in America. People are still paying their loans off. They're still making a ton of money and they're very much profitable. Brazil, for example, their largest populated area, they have a relationship with 44% of the adult population. How much bigger can they get?
If their competition can't make a lot of money because their users are kind of low income, kind of adds to their moat because it's harder to get started to compete with Nubank because you have to get more members just to break even.
You should see the amount of users that Nubank has gotten that were completely unbanked before because the banks in Latin America just wouldn't take them. You have a phone, you have Wi-Fi, set up an account. We make a lot of money off
Why
these
wouldn't
people,
the banks take them?
They
right? So
would,
maybe that,
but they have to travel 3 hours just to get to
well,
their local bank.
true
Is
as
that
well.
the value proposition? Because not all of Latin America it has the infrastructure that the value
100%.
proposition is like that it's remote, it's
Mhm.
from your phone, it's
Well,
mobile.
absolutely, and they're doing almost a Cash App style of growth. They just recently broke into Mexico and Colombia. There's nothing stopping them from breaking into America as well, but also Chile, Peru, Argentina. People are worried about inflation rates in Brazil and stuff. You should honestly look at it. They have a lower inflation rate than America does right now. It doesn't matter about inflation. Even if inflation doubles, it's just going to double the purchase volume. You're honestly a little bit of an inflation hedge whenever you are being an issuer processor, the way that any fintech that we cover.
Those rates are pretty in line with what SoFi is growing at. 11% quarter over quarter, 10%, I think is what we came in at. Meanwhile, Nubank has like 14x, like our total customers, something like that.
This is our total customers right here, what
Right.
they gained in Q3. Customer acquisition costs. If you want to compare this to SoFi, you're talking about $360 per person. I'm counting the total sales and marketing. So this could be including in cross-sell and monthly average revenue per active customer. You're talking about $4 up to $8.20. And they said if you use the platform for more than 24 months, the average revenue per user triples. The cohorts that are on here for longer than 2 years actually do $24 of average revenue per user, and it's monthly.
How are they not eventually over time going to be a competitor to SoFi?
Come on, like if we're talking about Bank of America, we can't talk about JP Morgan. If you just compare the financial sector versus the S&P 500, which nothing beats the S&P 500, the financial sector has beat it, in the past decade.
So why did they just become profitable right now, considering they have like 14x the amount of members that SoFi does?
Great management. David Velez, this man is a champion. Old Sequoia Capital. It's the reason why Warren Buffett is buying this company as well. He is taking the Amazon approach. He even said during this quarter, he said, right now, we're actually starting to really break into profitability. Don't expect it to stay this way. He said, we're going to go right back into expensing for growth in Mexico and Colombia. And they're still focused on the growth train. Although we're green, it might not even stay green forever because they're so focused on just sheer long-term growth. And they're not looking at it at a quarter over quarter basis. They want a big name for the next 20 years. It literally seems like a slam dunk success at everything that they do. The return on equity, whenever we're talking about tangible equity, was 58% this quarter. And then whenever we're talking about return on equity in total, was 40% for this quarter.
Since you mentioned return on equity, can we talk about like what they're trading at, their valuation?
So this is where let's all take a deep breath. With growth, with great power comes great expense. comes a great price. Let me share my screen here. Price to sales ratio of 8.4, price to book of 5 times. So much, much different than the value proposition of SoFi. This is why I'm much more capitalized in SoFi. I'm a big fan of SoFi. So don't make it seem like I'm jumping ship right now.
You'd be paying 5x for a stock that's growing at the same rate quarter over quarter. And as a kicker, as a bonus, the entire Galileo section as well that New doesn't really have. So
It's not even growing at the same rate. It's honestly, it's unfair to say that. It's growing at such a gross rate. Every product is growing at like 200% growth rates. It's
Wow.
disgusting.
I just mean the customers quarter over quarter.
They're only growing a measly 5 million per quarter. So,
No. You got to take the percentages, man. I'm sure JP Morgan is moving like 10, 20 million customers a quarter up or down. But that's because they're huge.
And that's the funniest thing is that like people say, oh, well, the average revenue per customer every month is so low at Nubank. And the truth is the only reason why it's so low is because they keep gaining so many new users every quarter. It's actually holding them back from allowing their older cohorts to just spend more.
I would also imagine that like the sandbox where they're playing in has a big factor to play in your decision. The fact that they are purely in Latin America, like you're not only buying Nubank, but you're also buying what you expect the growth rate of that region to be. And that's what you get with a lot of these international companies is you get tried and true proven business models in the States that are now being done in other places like C Limited, out in Asia or Jumaya in Africa is like Amazon copy paste, but in a new region that doesn't really have the infrastructure. And so for Nubank, one of the things that I'm thinking in my mind is like, how bullish am I on Latin America going forward? And how much security do I have in number one, the banking infrastructure, number two, the populace and overall in that region compared to the US? So there might be more return in that area, but there's definitely, I would say, more risk associated with putting your dollars where you know that maybe the regulation is different. You would have to do a lot more due diligence in terms of what does that Latin American landscape look like compared to something very tried and true, which is the US market.
Very true. So they have some of the highest NPS scores that you can even achieve. And
Wow.
versus other fintechs or even other banks, they are just absolutely insane. Like the customers love these products. This is their growth rate since launch. So they actually launched in Brazil first, then Mexico, then Colombia. And every single one that they're able to actually apply to next has a growth or a faster growth rate. So they're wanting to continue that. They said that they don't want to stop. Look at these growth rates though. This is not SoFi growth. Imagine personal loans going up by 300% year over year, and with 11 million that were actually eligible, and they only took 5 million of them. Compounded annual growth rates of 85% from 2018 to 2022. We went from 61% to 66% to 76% to 82%. These are counting active customers. So not like what we're seeing at Robinhood with monthly active users going down. More people are using this every single quarter for the last like 16 quarters straight.
Look, this is the first time I'm really seeing new bank numbers, and I'm trying to poke holes in it instead of being sort of blindly bullish and having this group think all the way through. Wondering, could an argument be made for their higher growth rates to be at least in some part attributable to the fact that they have lower competition in the space where they're playing, whereas in the US it might be more saturated from a banking perspective. And so SoFi is fantastic if they're growing 60% year over year, whereas in Nubank they can grow 300% year over year because they have this completely open runway and nobody to actually compete with them. Like if they move into the US and they're growing 300% in the US, then I'll be like, holy crap, Tannor, you were right. But I just feel like they're going to hit a brick wall because it's so overly saturated with banking plays in the US specifically that market is going to be so hard to penetrate.
And you're absolutely correct. But also with stocks, you're buying it not based on what the total addressable market is or something like this. You're basing it on growth rates, right? So and the assumed growth rate from the actual valuation that we're paying. Here we're looking at the activity rate of how fast people actually go to direct deposit, or they call it a primary banking account, which means over 50% of their actual transactions are all through Nubank. We're at 58% this quarter, and it's seeming like that rate is actually getting faster and faster every quarter. This is not 1.5 products for like it is on SoFi. This is the second someone gets an account in the first couple months, they already have 4+ products with Nubank. So the flywheel is insane. As we actually get new users, the monthly revenue isn't a lot. So right now the average is 8.2, but the longer they stay, you can get up into the $23, $24 ranges in a total cohort, the longer people actually stay on the platform. Just to also speak on the total addressable market, although they have 44% of the adult population with any sort of relationship with these people, they only have 13% of the credit card market and only 3% of the personal loan market in Latin America. This is another thing too, like how SoFi has recently changed their funding costs because we became a bank. Well, so has Nubank. They came out with this product called Money Boxes, which is very similar to SoFi's Vaults, where you can kind of box your money into different things. Like, hey, I've got a holiday spend thing. I've got, this next trip. I've got a college funding. And they did this little trick where they just said, we'll give you your interest rate, but only if you hold the money in for 30 days. This had lowered their funding cost from 98% of what they're calling of CDI. What percentage of the funding rate of the interbank central banks of Brazil? So it was 98%. So we were making a 2% margin on that. And then once they actually implemented it, 95%. And now we're starting to see the effects. It's dropped all the way to 78%. So that margin, Nubank gets to keep on this massively fast growing business.
Has this stock also been killed in 2022?
Oh, yes.
By like a lot?
Yep.
So basically the 8x price to sales, 5x book value is after it's down 60-70%?
Yes. Whenever it went public, it was like twice the cost that it is today.
Could you bring up the NPS score again and what it was comparing to? Because it said like Nubank was at like 100%.
I think it was 94 or something like that. Last time I checked their NPS scores.
94.
Yeah.
Wow. That's higher than Apple. That's higher than like Amazon and that's crazy.
Yeah.
That's insane.
I don't understand how you can calculate an NPS score when you literally don't have a competitor.
Well, obviously they have competitors.
On paper, of course, Tannor, but like, okay, let's say their whole motto is banking the unbanked, and they're capturing net new market. So somebody who cannot, I'm again just trying to poke holes going off of this assumption. But if the assumption is that I don't have access to drive or whatever, go 3 hours into the nearest city, but I do have a smartphone, I would not have gone to the traditional bank in the first place because they don't have the correct infrastructure to set me up. And so I am forced now to go into a mobile first company. Therefore, with Nubank being the only mobile, player in the space, they don't have a competitor. So obviously the net promoter score is going to be higher than Apple because you're asking people, hey, do you like this service? And if you say no, they literally have no alternative. It's not like me going Apple versus Samsung and then I can make a rating on which one I like. With Nubank, they have no alternative because they're the only mobile solution. Am I wrong or right in that assumption?
So there definitely are other mobile solutions. It's nothing close to the market for America, but like for example, we live in Canada. How many fintechs are there here? It's few and far between. Can you still rate a Wealth Simple to a Neo Financial to name a third one? Like I don't know. Do we have net promoter scores up here as well? Yes, and we're still not seeing Wealth Simple or Neo Financial throwing
Sure.
out 90s.
But and there's assumptions built into this, but let me just sum up what I said in a very simple sentence. The more you go towards fewer competitors in a space, the higher the net promoter score will be for the existing players. There's an inverse relationship there. If you have many competitors, it's much harder to get a 94 NPS versus if you have two competitors versus if you have one competitor or zero competitors.
Okay, but for the net promoter score, I think it's just like you said, Tevis, there is no competition. It is just a transformational different way of actually banking in this country, and everybody's starting to transition. The banking infrastructure in LATAM was pretty bad 10 years ago. I mean, like it still is now. And
Yeah.
they're completely jumping over what the US has did by like having like a in-between model of like online banking and also in person. They've just gone straight to the online banking. I guess that's why they have such a high net promoter score.
If we assume, right, it's mass generalizations. If we assume that the play on Nubank, the thing that's making them successful today is the lack of infrastructure, banking the unbanked, we can naturally assume that 10 years from now, as that infrastructure improves, there will be many more competitors in the space, which will then take market share away from Nubank. And so it's like a double-edged sword, right? Like the thing that's working for them today is also the thing that's going to hurt them in the future, which is the infrastructure concerns.
They have first movers advantage. Will people be able to catch up? Yes, but it's like will Tesla be the only company that's allowed to make EV cars? No, but you're also betting on early stage valuation for what it might be later down the line. Who's to say that this can't be $100 billion set bank in the future? Like you know what I mean, and start to compete with the large banks that are already down there, like Citigroup or something along these lines. You know what? They can sort of make a name for themselves. How's that any different than SoFi, for example? Like we're competing in a space that's already made, but there's still growth there. Population growth also increases Nubank in the long term. People that simply just don't have any phones or are unbanked completely, like these are people not even being tracked on these total addressable markets.
Do you think that there is concentration risk in the fact that out of 78 million total users, 70 of them are in Brazil, despite them expanding into Mexico and Colombia? Because of that concentration risk, like Brazil is not necessarily, how can we say, on the risk of mild to wild, let's say, it's definitely on the wilder side than something like the US from their political spectrum. So
Is there a concentration risk in the United States?
much less so than Brazil.
Are they the top 5 most populous country in the world? They have like 200 and something million people.
I don't mean from a customer perspective or from a population perspective. I mean more so from a policy / politics / regulatory perspective.
Oh, wow.
The US, I would imagine, has a much more rigid regulatory structure for banking in general than Brazil would, right? Like you have to be really secure in the fact that you're investing in a company that has such a high concentration risk in Brazil.
If anything, they are actually getting the regulatory headway that we're wanting. And then even in Colombia, they actually got a $150 million loan from the International Finance Corporation, the IFC, which was the first loan that they've ever given to a digital bank in Latin America or the Caribbean. The relationship that new bank wants to make with governments and regulators is that they are a very good person to deal with. They are 100% like trying to make their name as the strongest reputation in Latin America by doing no shady practices and going for the 20-year long stretch.
Yeah, no, it definitely sounds interesting, and I'd love to hear more about it. Maybe if Chris wants to come on in a future episode, then we can talk more in depth about it. But all right,
yeah, join the Discord.
Yeah, join the Discord. All of our links are in the description. That, I think, concludes our episode for this week. We'll be back regularly scheduled programming next Friday at 9:45 or 10 p.m. Everybody have a good night. And all right, see you, everybody.
All right.
See
Love
ya.
you guys.